Welcome to Core Finance, where we're joined again by Ryan Littlestone, who is a trader and analyst at ForexFlow.live. Hi today, Ryan.
Very good morning, Chu. How are you?
I'm okay. Dying to see what mix of charts you've got here. What's the first one? We've got the Chinese yuan.
Yeah, first one is dollar yuan, something that spoke about with Nick previously. A short trade that myself and some of the guys in our trading room have been playing, shorting up until the 7 level, which holds a big barrier and some official interest to keep that level from breaking. And we've been selling it recently, getting out in the dips. And basically, this was a big event over the weekend at the G20 to see whether we'd get further profit or not. And as the case has turned out, the price has opened up lower and headed lower, and it's all looking good so far.
Historically, is it a good idea to bet against the Chinese authorities?
Well, in this case, we're going with them because they're defending this 7 level up above. So, having that as a sort of backstop means we're going with the central bank and the officials rather than against them and speculating that the level will break. We've been in and out of this pair. We reload the shorts up towards the 7 level and get out on the dips. And this has been a dip. I actually cleared out quite a bit of the short trade on Friday because of the extra risk into the G20. But it's opened up down today, and I've got a small portion left, and I'm just running a small trailing stop behind it at the moment.
Right, so you're going with the Forex flow on that one then?
Yep, definitely.
Okay, next chart. Dollar yen.
Yeah, so this is dollar yen, and there's two sides to this story really. This US-China news. We've seen commodities react, we've seen the Aussie dollar react, and the commodity pairs react. Oil's up, CAD's up, but in most of the FX, it's largely been washed out already. We can see from this dollar yen chart here, we had a small gap up at the open, and we've completely wiped that out and heading to session lows. And that gives a bit of a reflection of how the market is, or some in the market are viewing this news. It's really a stay of execution perhaps for 90 days, that no new tariffs are coming in. So we've got this split between what's happening in some markets and what's happening in FX markets. If you look at stock futures and European stock markets, they're well up today. US stock futures are well up today. So for stocks, it's looking good. But if we look at your common and garden risk pairs like the yen, it's not showing the same symptoms here. So
one market is out of line. We don't know which one it is at the moment.
Yeah, I think there's a lot of the market who's seeing good news from this US-China deal, but some of the market is still very sceptical. And my basic feeling sitting here now is that currencies like the Aussie and the Kiwi, they're going to start to realise that perhaps this isn't as good as it's cracked up to be, and we're going to see that falling back again.
But presumably, it's the first day of the new month, and the fund managers are generously spending other people's money on the stock market. That could be the reason for the rally there and the disconnect.
Yeah, it could be, but this news has been spoken about all weekend, and we can't discount it. But again, how long it lasts? Does everything change? Does it change the picture for the Fed and the market getting more neutral about the Fed? This news doesn't do that, and we still haven't got a deal. We've got a lot of promises, a lot of we may do's and ifs, buts, and maybes. But until we actually get a final deal, the plane has shifted to slightly positive after the G20, but again, we've got nothing concrete, so that's going to test the market's patience. And the closer we get to this supposed deadline in January to get a deal done, if we don't get any news, then it's all going to turn sour again.
Right, just finishing off with the Aussie, decent base here.
Yeah, it's looking at a decent base. The trend is pretty clear. It's been up and up. Again, you can see we've got a nice gap higher there. I'm starting to lean today towards shorting this pair now, basically because I don't think this news is going to last in the market. We've got a good level up at that 74, 45, 50 area. We've got the 38.2 fib of the the whole year's move. It's also a prior resistance area. So if we get into that sort of area, we've got to crack 74 first. But if we get into that sort of area, then I'm going to be a seller against that level there.
Okay, so going against that inverted head and shoulders that some people might be able to see on that chart.
Yeah, there's a few head and shoulders people out there. It's not one of the plans I look at, but whatever floats your boat, as they say.
Well, I like to tease you with that. Well, on that note, Ryan Littlestone, trader and analyst at ForexFlow.live. Thank you very much indeed.
Thanks, Zach.